Good afternoon, everybody, and welcome to the closing bell here at MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock, and it was quite a exciting day, one that I don't think a lot of market watchers were anticipating, especially in the crude markets, but we'll get to that. But taking a look at the overall market, you see that the Dow Jones finished the day down 69 points at 20,855. The area that I want to watch here, watch this 20-day moving average on the Dow Jones. The industrial right now, I'm watching that 20,693 level. Now, we are off of that by a couple hundred points, but it's only going to take one bad day. That puts the short-term bulls in the Dow on notice. Break there means that it's going to start to gravitate towards that 50-day moving average at 20,259. I don't anticipate a huge challenge of this area. There is sideline money that is anticipating a pullback. This could be ripe for that particular pullback that we have not seen in quite some time. Taking a look at the S&P 500, did finish the day down about 0.2 of a point, $5.04 at 2363. The SPX cash index pulling back right now. Watch that 50-day moving average at 2352. That's going to be a critical level that has to be held in the S&Ps if, in fact, the short-term bulls are going to continue to control. Otherwise, you're going to see a challenge of the 50-day at 2311. This is the area that those that have had sideline money are looking to add to positions, especially that looking for areas where a lot of market pundits are going to call for consolidation after whatever might transpire as far as a pullback. This is the area that you're going to want to watch for that consolidation. A break of 2311, 2310 on the S&Ps, that's going to be negative for the overall trend. Finally, taking a look at the Russell 2000. The Russell 2000 finished the day. This was one of the worst performing indices, down $8.83 at 1366, basically in 4 cents. This is what I was waiting for. As I had said a couple weeks ago, and I continue to say, this is the canary in the coal mine. It is not, I don't hear the canary chirping. Thus, we see a break today of the 50-day moving average right here at 1371.74. It actually went out at 1366. We're going to watch this very closely. 1370 is now resistance. The market is going to need to get over that level in the Russell 2000 if these very economically sensitive, domestically centric stocks are going to be moving to the upside. This is also something that you're going to want to see as a catalyst if there's going to be any more upside movement in the near term. It could consolidate in this area, but now you got a big gap down to about 1270. That's the 200-day moving average, 1266. That's where the 200-day long-term support comes into play. So now you got a big zone of basically 100 points in the Russell 2000 where you're going to need to see some money come in, especially on these domestically centric stocks. That means that things like tax reform, interest rate policies, as well as trade policies start to need to take some formation here, as well as healthcare. And so we're going to watch that from the Trump administration. Taking a look at the dollar index today, strong, up 29 cents at 102.11. You continue to see that it held its 20-day moving average. It has been holding that average basically for the last month. And it's holding its 50-day moving average. The dollar is in a bullish trend. That has put commodities on notice, specifically, as we've discussed today, crude. Crude took a big tumble today, now breaking its 20, 50, and 200-day moving average. This is in a bearish one-day trend right now. One day doesn't make a trend, but with the EIA report, where the stockpiles now are at the highest level in history. We've been talking about the rig counts here in the United States picking up once crude got over $50. It actually started to kick up the rig counts when it was over 45. And the fact of the matter is that OPEC nations and non-OPEC nations aren't adhering to their production cuts. That has put a glut of oil on the market. Now, some may say, well, Joe, why did oil hold up even after we had the storage report out this morning? Reason being, we saw a huge draw in gasoline stocks. It was bigger than expected, and that held up the crude markets, but only for a moment of time. The negative crude action starts to put into question, are things actually as good as people are thinking? Plus, the markets have run on hope and promise. We haven't seen the policies that have been driving a lot of this market action. So that's why a lot of investment managers were very tepid at the beginning of the year to start putting money to work. We're going to watch this very closely. This is going to be a good barometer. And now that we're going into the Friday jobs report, and also the wage report, these are going to be potentially big market moving numbers, especially going in before the Fed next week. We do have one commodity space, though, that has been outperforming, and that is nat gas. If you take a look at nat gas right now, UNG was up 19 cents, and looking at nat gas right now, this has been an interesting move in nat gas. UNG has been moving to the upside, and it's been really coming off of those lows once it was challenging that $6.40 level mark. It's now looking to challenge long-term resistance at the 200-day. Has a lot of work to get above the 50-day moving average right here at 757. If it can get above there, you're going to start to see some challenges come into play, and that's the 20-day moving average. If the short-term bulls can get some momentum here on UNG, yes, the weather is still a little bit warmer than usual here, but there has been a massive cold front that's anticipated to come in from Antarctica. Not that I'm playing weatherman here. That's Tom Skilling's job here in Chicago. But there is an anticipation of some colder weather coming in. We're going to keep an eye on that. Also, watch with any supply or storage numbers. There has been some decent draws on the nat gas side. Watch the EIA reports that are coming out. Also, you saw home construction. ITB is a ETF that you can actually take a look at. ITB was actually up very strong. Home construction has been strong, especially in that price range of somewhere between 250 and 350,000. That is a core market that the home builders have been focusing on, and it is moving quite well on the new homes. It had been consolidating up until today. You see a nice pop up 39 cents or 1.2%. We're going to keep an eye on this. Home construction, you'd think it would come under pressure, especially if interest rates are going to be moving next week up another 0.25%. But that could actually be a catalyst for people to lock in better rates now, especially on newer, more fairly priced homes in those ranges. ITB up today. All right, folks, that's it right now for the closing bell. Join us tomorrow morning. I'm going to take a look at all the overnight action. Remember, China was on the move. On some mixed trade data. They had larger imports and smaller exports. Let's see how that's going to move the markets overnight in China, Japan, India, and Australia. All right, we'll see you then at 8:30 Eastern Time here at MarketStream.live. Have a great evening.